Hey everybody, Ben Hart here. It is Thursday, June 18th. We're recording today, just going to give you an update on what's going on in the world. So anything that happens between now and next Thursday at this time, I'll give you an update on then. But let's start off with what's going on in the world today. Obviously, we're going into World Cup, so lots going on in World Cup, lots of exciting games and countries rallying around each other, pointing in the right direction. It is quite a positive environment so far. It's gone off without a hitch, which is great. Canada plays a big match this afternoon or 6 p.m. today, win, and they likely get on to the next round because they've gone to a round of 32 this time. So that should be interesting. A lot to watch and pay attention to there. I think from a big picture economic perspective, obviously, most of the news and attention has gone around what's happening between Iran and the US and a temporary ceasefire to some sort, it looks like, at least a 60 days. Israel and Lebanon have been battling a bit, which has caused some risk to the ceasefire. So that's making things happen a little bit on the jumpy side. If you did read the Daily today as well, I put out that there were three Saudi super tankers with 6 million barrels of oil starting to move through the strait today. So it looks like it is starting to open up. It will be interesting to watch and pay attention to the rest of the commodities starting to flow through there. Is that going to continue too? So I think that's an interesting piece to watch. Obviously, price at the pumps coming down, so I'm sure people are happy to see that. But with the settlement or possible settlement, that's certainly taking the gas, for lack of a better term, gas pedal off of the inflation number right now, and likely we're to see a bit of a reprieve there. Markets haven't interpreted too much on it just yet. So we'll look at that as well. Yesterday we had Chairman Warsh's first meeting, and so he spoke around what to do with interest rates in the U.S., and they did nothing, of course, as expected. I think an interesting view because he still has that expectation that you can lower front end rates without touching the longer end and letting the longer end of the market control itself. So we'll see. The bond market reacted in a bit of a strange way when he spoke. Initially, yields actually went up, and then we'll be interesting to see how that plays out from here. Gold as well got whacked coming out of that meeting, and so gold was hit on the head a little bit from there. And the U.S. dollar has been on fire and been rallying quite significantly, actually up versus Canadian dollar year to date for the first time in a while. So that'll be a key to watch to see how things progress from this point. So I will kick us over to the charts. We can look through a few things and I'll give you a sense of what I expect and want to do next week and a few of the things I've been looking at in trading this week. All right, as I mentioned, this is June 18th, so we're recording this June 18th. Um, All right, let's start off with this. Canada population retrenchment is reshaping the labor market. Yeah, I mean, I think that's a long-winded way to say a number of different things, but let's just say that we're looking at it from this perspective. Obviously, government target plan for end of the year 2027, so share of non-permanent residents in Canada population. So obviously, there's been adjustments to the immigration policy, open, closed. And that, of course, has an impact on the labor and jobs market. So I thought this was an interesting chart to pay attention to. Unemployment rate by population segments was a 3 month moving average. So non-permanent residents have obviously come down. That has a lot to do with the student changes to the student visas and policies. Immigrants, so this rallied up here and then has gone down and it looks like turning over a little bit. And then we'll say born in Canada. What's going on there is the jobs market is starting to change a little bit there. So unemployment rate by population, interesting segment to look at to what's going on with our economy and what we're likely to see from this point forward. This is for the chart people, so technical analysis and gold. So I think these are the perfect two things to look at when people like to look at charts and such. This is from our internal technical analysis team. Dennis Mark does this and puts out a view with what's going on. And so just if we look at the gold chart, Effectively, you can see it's the gold equities are starting to show technical deterioration. Gold bugs, gold ratio chart is starting to test support, and the risk is breaking the rising trend. And so this is a pretty material number, I think, that we need to pay attention to. This is the Huey that everyone looks at. And we've seen it take off from end of the year, early this year, excuse me, from the previous year, so 24. And now we're starting to see if there's an opportunity as to can it hold and do we start to pick up and reaccelerate off these technical levels. When you're drawing these trend lines, obviously, if you look at we've bounced, and now we're hitting a material level because we had such a big run up and then now down to a support level. And support's always very important to watch and pay attention to. If support holds, that's a good technical level and signal that we want to say that this is potentially an opportunity that we'll look forward on. It's a great report. This is FIFA 2026 economic impact. When these events happen, I'm always curious around what's the impact, what's the potential positive for the country, and which these events are happening. And this is a pretty good summary breakdown. So this is U.S., Canada, and Mexico. So U.S. obviously is the major host. They're hosting in 11 cities. Boston, New Jersey, Atlanta, Kansas City. So all over the US, Los Angeles. And so they would have 78 matches. Projected economic impact based on the current data is about $30 billion and GDP contribution about half, just over half of that. Then if we look at Canada and Mexico, Canada, Toronto, Vancouver hosting 13 matches there. Mexico, 13 matches in three host cities, and pretty similar numbers, at least in Canada, projected 3 billion Canadian economic impact with a GDP contribution of about $2 billion. So still generally quite positive for hosting these type of events. Obviously, a decent amount of time and money goes into preparing for them. And so I think, these are some positive events, certainly for North America. We're going to have that's going to have a bit of an impact on the jobs numbers that we'll have to pay attention to. Temporary jobs come in as they work through the World Cup. And so I thought this was an interesting, cool breakdown, just a sense of what does this mean to the individual countries, and it's generally a net positive to them based on that. As always, the opinions in here do not necessarily express those of National Bank Financial. Anything we discuss, talk about today is unique and different for every individual's risk level. Should you ever have any questions about anything we discuss, please reach out to Eva or I, and we're happy to have a quick conversation discussion if any of the things are appropriate for you and potentially appropriate for your investment portfolio. So that's it on the charts of the day today. Just give you a sense of what's going on in markets and or rate land. And so if we look at the U.S. markets, we're looking at the U.S. 10-year at 440 and the U.S. 30-year at 49. So yields have come down in the last week or so. And if we look on the Canadian side, there's still a significant differential between the U.S. and Canadian numbers. So U.S. Canadian numbers are 3.37 on the 10 and 3.79, so almost just over a full 1% on the long end in US versus Canada. And then on the 10-year, you're looking at about 75, 80 basis point differential. So that's interesting and worth watching. When I've had the question around what's one of the things you want to watch, and the US 10-year rate is certainly one of those. As we start to creep up higher towards that 5% or so level, that puts material risk on the economy and markets. And so now we've been hovering around that, 4.4, 4.6 levels for quite some time, and the market's stabilized there. So that I think is a piece that we'll want to continue to watch. From a stock investment portfolio, number of things I've been looking at. Been looking at potentially taking some gains off the table on Intel. I have done so already, but Intel had a positive announcement today that they are in some type of partnership with Apple. I think President Trump might actually announce that, but it was positive news for Intel, and it's hit a new 52-week high today around 135. Well, from that, I'm looking for where and what do we do to reposition that. I'd say the two companies and stocks that we're looking at are Netflix and Palantir. Those are the companies that have been beaten up a little bit over the last 52 weeks that continue to have unique footprints and opportunities. At this point, their stocks are down, reasonable forward guidance looking in that space. So those would be two that we'd be looking to consider into portfolios. And the last piece is what do we expect to happen next week? Obviously, we continue to watch rates around the world, watch inflation. If the continues to stay open, I think we'll see those inflation expectations continue to kind of come down. I, yeah, I think Kevin Warsh this week was very important and key. He didn't do too much in that first meeting, but my expectation is he's going to do quite a bit more in the upcoming meetings. And when I say quite a bit more, it's more from the structural basis of how the decisions are done and made there at the Fed now versus like cutting rates and raising rates, all those sorts of things. The odds of a rate increase actually went up this after this past meeting. Doesn't make a lot of sense because they continue to talk about rate cuts in order to stimulate the economy. So that'll be important as the world learns to deal with what and how he says things. The other thing that he's talked about is he doesn't like forward guidance. So I'd expect probably at some point in the next meeting or two, we'd see that dot plot or that forward guidance start to dissipate and move away, and a little bit less information for the markets, which should provide maybe some more opportunities as less information at times can give and level the playing field to some extent with us and institutional investors. And so that'll be important pieces to watch. That's it for today. Thanks for listening to me. Thanks for joining us. Good luck to Canada, 6 p.m. today. Hopefully, you're going to watch that. And as always, if you need a meeting, have any questions, you want to discuss anything we talked about today, please reach out to Eva or I. Happy to book a meeting, spend some time, and answer the questions that may be appropriate for you. Thanks so much, everyone. Have a great weekend.